Are we now on a pace to getting this put behind us if we're Toyota? Akio Toyoda, the president that Jenna referenced, on his way now to the United States. He's going to come here to address the issues finally. Can they put this behind them with this latest recall?
Absolutely, Colin. You know, what I think is this is an excellent buying opportunity for Toyota. I mean, just imagine this. You got the most pristine, arguably the most pristine car manufacturer in the world that's down more than 20% right now. You also have the global markets retreating at this point, which we're understanding this kind of correction. And, you know, we're, as a consumer, it's not foreign to us to have recalls of manufactured goods. And so, in my opinion, I think Toyota's built quite a pristine brand for itself over the decades, and this itself is not going to derail that by any means. So, over the next couple weeks, as we start to see the shares bottom out, I mean, this could be just a perfect storm to pick up a great stock.
Well, taking a look at the Washington Post this morning, Adam, Toyota's president wrote an op-ed piece talking about the plans for the company. And these are the plans, according to the president. He's going to have a quality control center here in the United States with the top engineers that he has in his company. He's going to have a blue ribbon board that is outside experts looking at this problem as well. And then he says he's going to aggressively investigate complaints that come into the company. Those are kind of the game plan for Toyota. The company's been in business for about 50 years. How long do you think it takes before the company puts these plans into implementation and before consumers and investors start feeling a little bit more confident again?
Once again, I mean, I really think that this is a short-term issue, and I think that they're
short term?
I'd say within 6 months, I mean, you'll start to see a rebound. I mean, obviously, the global effects of the markets as the macro trends are my biggest concern with the issue. But in my opinion, I think this is going to be a relatively quick fix compared to some of the other issues that have been out there. And, you know, with the North American president going on the stand, if you will, in front of Congress, I think the banking executives are going to get hit a lot harder than they're going to get hit.
Well, we'll see. And the president of the company also may be at those hearings, or at least visiting the United States now sometime next week. Thank you, Adam. Appreciate it. We'll talk to you throughout the hour. Adam Condris is out there in California for us. Now, on to some other, obviously had a rough stretch here across the board for stocks, pulling back, the currency situation, the concerns about European debt. Where are we in all this, and what's the next move as you see it?
The next move, well, you know, Colin, that's a tough question, as you know. I mean, the market basically works, I mean, it seems to work on some type of speculative crowd mentality and then uses some type of event in the world markets in order to justify its actions. I mean, we've been anticipating some type of pullback for some time now. And so, you know, the financials are the ones that led the charge up, and now they seem to be the ones that are somewhat causing us to stub our toe here. And so we got through the 10,000 level mark, which is that psychological floor. My guess is we'll be trending downward still a little bit. I think we're still a little high at this point. I'm not going to tell you what a floor is because your guess is as good as mine. So, you know, it's going to be an interesting next couple months, but expect volatility.
So here's the fun fact to use to impress your friends, Adam, on a Tuesday. Apparently, this is the 11th month anniversary. So the bear market bottomed out exactly 11 months ago today on March 9th. So we're getting closer to that year anniversary. What do you make of the late day sell-offs that we've seen over the last several sessions?
Yeah, what you're seeing is, I mean, folks, with the speculation is there, and so once you get towards the end of the day, you start seeing once again that mentality of you know, am I going to cover and what's going to happen, and being in the middle of earnings seasons and everything that we're seeing right now. I mean, that just stews into the normal sell-off that people happen when there's uncertainty. You'll see that sell-off towards the last part.
So
of the
is that
session.
irrational? I mean, is that kind of an irrational behavior? You talk about the herd mentality. You talk about this kind of covering before the market's closed. Do you think that's irrational, or are these rational concerns that the market's trying to deal with?
In my opinion, it's all irrational. I mean, what it is that it's just it's the traders trying to find and follow the ebbs and the flows of the market. I mean, the thing is there's so many mixed signals out in the markets right now that volatility is the only thing that I can point to that makes sense.
And it seems more technical, doesn't it, than fundamental a lot of ways. And the S&P 500 is off 8%, I believe, from its high in the middle of last month, but it's trading below its 50-day moving average, and has for something like 12 consecutive sessions. So, I mean, do you look at that earlier, as we look at a chart of the S&P here, as earlier in the show we were talking about buying opportunities in a stock like Toyota. What about buying opportunities for the market in general with the technical action we've seen here of late?
You can focus on the technicals because what everyone's trying to do, Connell, I think you're absolutely right, is they're trying to find, they're trying to find an answer to this. They're trying to find a formula because literally all the traders, all the strategies have really been flipped upside down with all this subjective and qualitative data that everyone's had to interpret. And so throw all your models out, throw the Excel out, throw all your prop desks out because, the strategies that we've all implemented and tried to rely on when we rely on a normalized type market or a more irrational market, it just isn't working. So
we'll just
that's
start,
what we're seeing is
we'll start throwing darts, Adam. There's this kind of lobbing.
I hate to focus on that, Jenna, but you're right. You're right. Darts might be what I'm going to focus on in the future.
Send us a video of that, all right, Adam? In the meantime, we'll be back to you in just a little bit, talking a little bit about the financials more. Adam Cooper for us out in California.
All right, Adam. Thanks a lot. Now the Toyota
on March 1st.
Yeah, we'll see how this one plays out. Adam Connor's back to talk with us about it from CK Cooper in Irvine, California. You know, it's interesting, Adam, because a lot of people were surprised when the judge rejected the first settlement. Said, once a settlement is reached, a lot of times it's like, all right, fine, you guys settled it, let's move on. And he's, nope, not so fast. Well, I wonder what will happen this time around.
Yeah, it looks like Connell, he's looking for some heads to roll is what he's looking. I mean, he's clearly asked with his feedback on the case of, I want to hear names. I want to hear who's at fault for this. And so that's really what he's seeking. He's seeking some type of PR justification in order to, understand. Because the dollar amount went from, what was it, 33 million to 150 million now where we stand. And the judge still giving preliminary feedback of wanting heads to roll. And so I think that's really what's desired here.
Well, it's interesting. He seems kind of like directly out of a character, I should say, of Law and Order. He has that kind of reputation right now. And you're right. You're talking a little bit about the dollar amount, but according to the judge in the New York Times, it's not about PR. He says it can't just be window dressing. It's got to have some potential meaningful effect. And so that's why some say he's looking for a dollar amount between $300 and $600 million instead of this 150. So is the dollar amount important to you as part of the investment community?
Sure. I mean, the dollar, $30 million to them is not much. $150 million isn't much. And quite frankly, in the grand scheme of things, to go through this entire litigation, I mean, the M&A activity, there's a lot of times there's shareholder litigation and other types of litigation that come out of it. And $300 to $500 million to $600 million for this case really isn't as that significant as one would think. And so the dollar amount, he's trying to get to a number in his head, obviously, but I still sense an underlying feeling that he wants people to be named.
Well, speaking of people that would be named, we just had the story coming into this section about John Thain and his first day on the job over at CIT, and of course he had been running Merrill Lynch during the merger with Bank of America and then was forced out. But what do you really think happened here when Thain and Ken Lewis worked out that deal, and what was really going on behind the scenes? Did we not know how bad things were at Merrill Lynch, or were they not as bad as they were thought? I mean, what's your sense of what really happened?
My sense is that there's a tremendous amount of things that happen behind closed doors, and the conversations between the government, between the intermediaries, between even the companies themselves. Everyone was forced into a very difficult situation during that time where we had to make a lot of quick, decisive decisions that, either way we're going to have ramifications in the future. And so, here's a way to have the finger pointing and everything be played out on the other side of that. And so folks know that when tough decisions are made quickly in the heat of the moment, that there are repercussions. And so these are the ones that we are seeing. And quite frankly, those things that happen behind closed doors we'll probably never hear about.
Well, and it's interesting because the judge apparently isn't just putting Bank of America in the hot seat. And he welcomed everyone back from the SEC and also from Bank of America when they came back in court yesterday. So he's also looking to send a message to the SEC about what they should demand from Bank of America in their investigation. What are your thoughts on that?
Yeah, I mean, it's interesting because he's saying the SEC is not being punitive enough or strong enough on the companies. And so it's interesting that these two parties have come to agreements now a couple of different times, which they both feel are substantial enough, and the judge rejecting them. So obviously the judge has an agenda to to this situation, and who knows what it is until he finally puts the gavel down.
Yeah, we'll see if they actually go to go to court. Adam, thank you very much.
Looks like it
Appreciate
will
it.
be.